Greetings traders, Jason here with swinghigh.com. It is Wednesday, October 28th, and the market's just closed, down big time. S&P down 1.89%, the Dow down 1.15%, the Nasdaq down 2.24%, the Russells down 3.33%. These are huge moves on the leading indexes here. Finally, let's look at the financials. Down 3.1%. Wow. The Nasdaq, Russells, and financials are leading indexes, and they are down much harder than the S&P and Dow. That alone indicates that there's more in store to this downside move here. Everyone's saying it feels much different than every pullback we've had recently. Wow. The VIX up 12% today. That is huge. Over 27, approaching 30 very fast. Wow. The trend hung out in bearish territory for the most part all day today. Slipped back towards neutral at the end here, but nothing too significant. The tick, obviously bearish all day. Right here is my zero line, that red line up there, and we hung out underneath there all day. Let's look at the only trade I took today. This morning when I saw things were going to get bad, I got in right here on this little candlestick on SPXU, which is the triple leveraged inverse ETF of the SPY. I got in at 44.02, and now we're sitting at 46.21. As you can see at the very end here, I threw on a limit order to sell at 46.23. That didn't fill. I'm going to reevaluate my position right after I make this video and see if I want to hold that overnight. I'm very nervous holding that into our economic reports we have coming out tomorrow morning. As you can see here, we have GDP and jobless claims both coming out at 8:30. That is going to be huge. If anything can stop this short or bear rally or whatever you want to call it, this down leg, GDP and jobless claims can definitely do that. They can turn this down leg around so quickly. It's not even funny. So I think what I will do is get out of my major positions before GDP and jobless claims come out, so that I am not exposed to it. And if they come out bad, maybe I'll hop right back into SPXU. But if they come out good or better than expected, I might have to wait and see if we mark a swing low. Let's look at the long-term daily chart here of SPY. These bright blue lines are my rising wedge formation on the daily chart, and as you can see, we are clearly breaking down out of it, and volume is picking up on this down leg, which shows major conviction. Along with the VIX and the tick and the trend, everything is showing that the markets are convinced that they need to go lower here. Of course, it can turn around very quickly. We'll see what tomorrow brings. The Dow is relatively strong to the S&P, although I could draw another line right here, and that could be a weak rising wedge breakout or breakdown. The volume is picking up there too. The financials, relatively weak for sure, definitely breaking down out of this rising wedge formation here. Small caps, actually I'm going to come back to them in a second. The Nasdaq, definitely showing relative weakness to the SPY, broke down out of its rising wedge formation. Not quite a rising wedge formation, more like a channel, but broke down nonetheless on increasing volume. And the Russells. The Russells have been showing relative weakness for the past 2 months now, in that when the markets like SPY made a higher swing high, you see swing high here at 108 area, then swing high at 110, higher swing high. The Russells made an equal swing high and have a confirmed double top formation because we broke this low right here. That's very bearish. Thanks for being a part of swinghigh.com. I'll talk to you tomorrow.